Hello, trading is closed on the 5th of January, 2022. Let's go over our disclaimer first. It's my trading plan for Thursday, January 6th. Please remember I can be wrong and all trades should be at your own risk. We always start by going over our calls. Look for the pattern with the early high, that's this. Tomorrow should also have the early high. This is a pattern which typically is a rally day. Failure is a straight line drop, and that is a straight line drop. We get to cross a target off the list from January 3rd, 47.72.48. That number had been almost hit earlier. Normally it'll offer support, and there actually was some, but typically it'll only offer lasting support once, so when you go through it again, the bottom falls out. During the day, MEJT said this rally wouldn't stick, said this drop wouldn't stick, said this rally wouldn't stick. Put this here if you want. And now it says this drop's not going to stick. This is a target of 47.70.79. I don't think that's going to print. It's not one of my rules, but practically always when there's a major change in trend, MEJT leaves a failed target. So if this is a major change in trend, which I've been looking for well over a month, I'd like that number not to print. This is a pattern which is normally positive when it's negative. Instead, more negativity tends to follow, even if you bounce a bit first. To invalidate that, you pretty much have to gap up and take out today's high, and that's not going to happen. Well, I said it was getting harder and harder to maintain the bear case, but I never really gave up. I did say there was more work to be done on the downside. That's not the same thing as saying we're going to collapse, but I did say there was more work to be done on the downside. This is our longer term chart. The longer we stayed up here, the harder it was to stick with it, but I never threw in the towel, which is pretty fortunate because I was getting close. Now this is a valid break of this line. According to the Marx rules, we should go at least 90 points or so under this line. Now remember, the line's dropping, so we can't give an exact figure. And if we reverse back through it promptly, that gets canceled. But otherwise, there's resistance at this trend line, and look for at least 90 points, and that's a target. It's not a stop and reverse. Well, I had this as the most likely count, even though it's not the only count. You can now count an ABC as complete. C has an extended Fibonacci ratio with A. Normally it doesn't get much more than that. You can count 5 waves down. And there's also a wall into the close. I don't like to play catch the dagger when I think we're starting a big decline. But if we do rally from here, at least you got an explanation for it. I really toyed with whether or not I should even show this wave count. Just looked a bit bizarre to me, and the only way it would work really is if we had a collapse, or else I looked pretty silly. But I decided to show it and then say it was hard to believe, but it's not so hard to believe right now. In fact, I think it's probably the right count. If it is the right count, this is a Fibonacci target of the prior consolidation. So with the fib target and the wall into the close, at least you could justify a rally at the open. Doesn't mean it has to happen, but certainly it's one of the places from which it could happen. Well, if that's the right count, then we are starting wave blue C down. Blue A was around 250 points. 250 points from this would put us in the low to mid 2500s, and that's where there's our next MEJT target. Now this is one day after we hit a new all-time high, and we closed. This dotted line's the close. We closed under every high of all these last 2 plus months. 2 months. So that's a real rejection of the high. But any move, it needs confirmation. I mean, you have to get follow-through, even if it isn't immediate. I mean, if we gap up tomorrow and erase all this, that break doesn't mean anything. It has to be for more than a day. Well, tomorrow's pattern has a really high. We could still gap down. Today's normally bullish pattern certainly wasn't. Should lead to lower prices even if they don't come immediately. One day after hitting a new all-time high, we undercut all prior highs. We also have a valid break of a TD line with a much lower target. Still need follow-through for confirmation that we rejected the all-time high. The wave counts on the wall into the close both make an opening rally possible. But if the bear case has any validity at all, rallies from here should fail, and they probably will fail very big. So it wouldn't surprise me if we bounced a little bit here. But if the idea is right, it shouldn't be long before we hit significantly lower prices. I said at the end of the last year, I looked for much lower prices as long as last year's high held. We actually broke it by a few points, so I'm not going to get any credit. You have to put your stop someplace. But I still think we're in for much lower prices before the year is out. I'm going to change it to saying if this area of a top holds. And after today's trade, I think it's increasingly likely it will hold. It kind of was really right on the edge. I mean, as recently as yesterday, if we had just broken through instead of collapse, I was ready to get rid of the whole idea. But I didn't, so once in a while you get lucky, I guess. And we might bounce a bit tomorrow. It has the early high, but all we need is undercut some lows, ideally close under these lows to confirm the top, and I expect that to happen. And that's today's call.